And that means we are now live here on our YouTube channel, Tackle Trading's Halftime Report, our daily show where we go through the stock markets, the news, in anything in corporate news, commodities, currencies, across economics as well. Try to break it all down, have some fun while we're doing it, and help you guys out there run your daily routine. If you're a veteran of our community, welcome back. And hopefully by next week, I'll get my voice back. But as always, I enjoy coming in on a Friday, hanging out with the team. And give me a hashtag Team Tackle right in the chat. If you're brand new to our channel and you're coming out for the first time, welcome. And click that subscribe, click the thumbs up, and come back and join us each and every day. On today's show, we've got some corporate earnings out of Chewy, Oracle, Peloton. We had CPI data come out in the morning, which can kind of paint a very important picture about inflation. We'll have Coach Matt break that down. Other corporate news grabbing our attention, but quite frankly, first we got to start. It is 9/11 here, and obviously a solemn day, a day of remembrance. One that we were just sitting and talking about where we were and whatnot. I think a lot of conversations are probably happening like that around the country right now. Mark, as the elder statesman here, what are your thoughts on a day like today?
Well, all of us likely remember where we were 19 years ago. It's one of those moments in history that, you just never will forget. You'll never, you woke up that day and then you exited that day and it was a different world. We had never experienced anything quite like that. And it was a horrific event. And one of my memories of it was not just the event of the day, but how America came together after that. There was a unity, a solemn, people were kinder. And it is just one of those things that when tragedy happens and you look back and you think about the time, you hugged your kids a little tighter that day. You called out to family members to see if they're okay. It was just one of those days that we'll never forget. We'll always remember and honor the individuals that were lost that day, the families that were impacted, the heroes that gave their lives. It was an example of the worst of humanity and the best of humanity all at the same day, as individuals literally charged into burning buildings to try to save other human beings, to save their fellow citizens, their fellow humans, their fellow neighbors. And it is just a day that we should always honor, both always remember and always be grateful for. And it's a day that, you should hug your kids a little tighter again and tell the family members and your friends and your loved ones what they mean to you. And it's a day of respect, it's a day of honor, and it's a day that we should reflect upon.
Mm-hmm. I had the opportunity a couple of years ago while I was teaching a workshop in New York City to bring my daughters with me for one of the workshops. I don't know, I can't remember if you were there, Emily, or not. But we stayed over the weekend and we stayed an extra day or two so that we could see all the stuff. And one of the very first things we did is went down to the 9/11 memorial, and it just is such a somber place, just an amazing place to kind of go and spend some time and think about it and reflect. And Mark, I think you're right. And by the way, very well said, my friend. Kind of reflects a lot of my sentiments. I think you're right. The world did change for me, and I think everybody I know very much right after that. I mean, Frank, you were in college at the time, I believe, and working at the time. Do you remember that morning?
Oh yeah. I was at the group home. I worked at a group home, and we watched it together that day. It was nuts. Mark's nailed it. I mean, it just a day that you won't and you shouldn't forget.
Yeah, no, I don't think so either. Maddie, I know we've got you in the car out there. And by the way, thank you for spending the time to come in and help us hang out with the crew here on a Friday. You are
it's a pleasure to be here.
You're on the road, but what are your thoughts around 9/11, Matt? I mean, obviously, were you in Washington, D.C. at the time, or just Salt Lake?
No, I was in Washington, D.C. earlier. I was doing an internship for Congressman James Hansen out of the 2nd District of Utah earlier that year. And it's 9/11 impacted all of us. It was our generational Pearl Harbor. And I thought what Mark said was on point. And it's a day of remembrance. It's a solemn day, but I think it's one of those days that we will always remember where we were, what we were doing, the emotional roller coaster, the fear that was all around, not just, just here locally, but around the United States and around the world. It's just one of the most shocking and saddest moments of all of our lives. And so I agree with what Frankie said. It's a day we should always remember. It's a responsibility on all of us to always remember how we felt about that moment and how that moment brought us all together. And, it's just one of those moments in time that reminds me of the pain that people go through. But one of the reasons why I will never give up on the positive mentality of humanity and in the heart of hearts, humanity being good is how people responded in that moment of crisis. Coming together, unifying, looking out for one another. It was one of the saddest moments of our lives, but what followed and what transpired after it was something that brought us together as a society. And I just think that's a special thing. So it's obviously a solemn day, a day we should always remember. And I thought what Mark said was pinpoint.
Emily, I'd hate to not get your take on this as well. I mean, what were your memories of 9/11, and what are your thoughts on a day like today?
Well, I live in the Washington, D.C. area, so obviously, when we got word of what was happening in New York, shortly after that, we heard what was going on at the Pentagon. So it was, it was shocking. It was such a scary moment just to be around, where the impact, was. And obviously, being in the Washington, D.C. area, we have a lot of family that works for the government, and people just like work around that area. So there was no cell phone service, and it was just hard to get a hold of people to find out if they were doing okay. It was just it was a long, scary day, just trying to make sure that the people that that you care about were okay, and that they weren't impacted. But yeah, it was just a sad day all around. We all just kind of I think we closed the office early that day, and we just all went home and just was stuck to the TV, just watching all the things that were that were happening. But yeah, it was a very sad day, and of course we will never forget where we were at the moment that all that happened.
Yeah, and thanks for sharing all your thoughts on that, guys. I know that we're here to talk stock markets and whatnot, but sometimes there are just things that are happening in the world that just kind of take precedence, and we'll start the show with that. Appreciate everybody out there, putting some time into it. And I think, Matt, you're right. It's our responsibility to remember and to also to teach our kids and to continue to remember what happened there and sit down with people and have tough conversations at times. But let's break down the markets for right now here, guys. We can talk a little bit more about this later if we choose to, but let's start with the S&P and a technical read here. Frankie, I've got you here on a Friday. I'm going to take advantage of your skill set. What are you seeing in the chart here on this pullback? We're now in between these moving average locations, test on the 50, but you're below the 9 and the 20. What are you reading right here, Frankie?
Yeah, we're in a pretty good little battle. The weekly low is going to be really important. That's going to coincide pretty nicely with that 50-day moving average. So the buy the dippers who came in off of that bounce, their support is still holding, right? Whether you believe it's going to maintain that or not, that's a different story, but currently it is holding. On the other side, wimps like me that say I don't like deeper retracements because they almost always do something like this, we've identified a level of resistance in the form of this week's candle. Both of those are going to line up pretty nicely between the 50 as a support zone and the falling 9 and falling 20 as a resistance zone. In my opinion, the break below that 50, and I always, for better or worse, want to call that a close. I always think the close is better information. It's a pretty, at least short-term legitimate sell signal, in my opinion. As long as we hold that, I would play the other side of it. If we can take out this weekly high, I would call that a pretty decent buy signal, because either we A, failed the breakout and then ran up and took out resistance, or B, held support, created a higher level of support, and then went and took out resistance. So for me, the way that the weekly candlestick has developed and the price action for this week is really telling as we are going into maybe the short term. I'm not projecting where we are, 2 months from now, but I would call, either of those signals and anything in between an area to be cautious.
Mm-hmm. You know, Matt, one thing that you talked about earlier in the week on this 4-day trading week where we started on Tuesday back and forth, we really saw some intraday ranges develop. Cody, give me an intraday chart if you can. Matt, one thing that you really nailed earlier in the week is that 3450 trigger. And if it didn't happen, it just flat didn't happen. And we weren't going to get any kind of confirmation. Tuesday, we saw selling. Wednesday, we tried to rally. Even this morning, for a minute there, wanted to try to rally. But Matt, we're now stuck on this intraday range. How are you approaching the technicals on this one, Matty?
Well, I think it's very simply the battle lines are drawn here, right? I mean, the trenches are drawn to a certain extent, and you really got that zone of support in this. I mean, up, down, right? That's what we've been seeing over the last 4 days. You really have these lines of support and resistance very, very clear at this point. And you're looking really kind of on the intraday perspective, and you're kissing it right now at that 30-20 level. You got that ultimate, significant support zone right there around 3,000. On the top side, you're looking at that, 34.23 level on the top side, right where that first line is, that top line is drawn. And then ultimately, if you want to see the continuation of the momentum that the market's had over the course of the last, couple months here, you're looking at that, 34.50 level in terms of that potential breakout. And until it wants to break out one way or the other, I just don't think you should be aggressive in this market. I think you got to pick your spots, and you got to wait for you got to wait for the market to break out of resistance or support here.
Mm-hmm. Mark, you love, when markets drop a little bit because it gives you a little bit more premium on your naked puts. You've also been calling that you would love to see a neutral market for a little bit. Is this the kind of price action you want to see develop for your own personal stuff, Marky? I mean,
I've pulled back the last couple days. I mean, that 50-day moving average is a key hit. I got enough exposure down at much lower strike prices. So I got a lot of theta working already. I'm not adding to it yesterday, and I didn't add to it today because that 50 gives out. If that 50 gives out, we got a little bit of drop, and I might take advantage if it drops again. But right now, this is a tenuous battle. It really, really is. This is we anticipated a battle. We didn't know where the zone was going to emerge. We didn't know if it was going to be at the top of the chart, right? Maybe intraday support held on the breakout level, and we are having this same kind of battle a couple 100 points higher. But this is where the battle's happening now. We have a tentative support level coincided with the 50, but it's very tentative. Investors are very skittish. I mean, if you saw Dave Portnoy yesterday, in the last 30 minutes of Dave Portnoy, who, according to Jim Cramer, how the market goes is what Dave Portnoy decides. But in the last 30 minutes, he's like, I gotta sell to close because I'm gonna have a margin call and have to write him a check. And so, there's Dave Portnoy. Stocks always go up, but maybe he was a little over leveraged there, Mr. Portnoy was. And so that times a million.
Hold on. A margin call and a 3% downward movement in price in the marketplace?
I'm repeating his words.
Oh.
I'm repeating his words, not mine. So like he was selling, he's like, and so if in a skittish marketplace, if investors everywhere are a little over leveraged, and if the algos smell blood and that 50-day gives out, which now coincides with an intraday support level that's been battling during this week, that's a nice clip downward in that scenario potentially. And so I think caution is particularly warranted right now. I've done a little rolling down and out of some of my positions. Might get looked to get put a couple things. I'm not doing anything with them, but I'm certainly not going to add to risk exposure right now as this battle plays out. I just think I would love support to hold. That would be ideal, but you don't always get what you want, and you have to prepare for both scenarios. What's your plan if support holds, and what's your plan if it doesn't? And I don't want to add any more risk exposure if that support doesn't hold.
Mm-hmm.
About 99.8% of the marketplace is begging for that 50-day moving average to hold right now.
Oh, listen,
begging for it to hold right now. just please saying the prayers, doing their dances, just
Dear
doing whatever
Lord
they
God, I
can.
promise I will not eat meat this weekend if you just let it hold.
No, hey, listen, I don't know. What is this
There
song
you
and
go, right
dance
there.
you guys do? Because I've been gambling for 25 years now, and I've had many horrific days, and I've had many sports bets out there that I was like, oh, please. And I've had many trades out there. And for me, it's, I promise I'll quit smoking if I just can get this trade. I promise. Listen, I'm done. If
Okay, wait a second,
Cinemark
though.
can just turn around, I'm done smoking. Like, what's
So
you
how
guys'
many times
go-to?
have you said that, though?
Oh, I've said it about
I need-
4,000 times in the last
Yeah.
25 years, and I meant it every time. Every time I
I
meant
totally
it.
respect it. So Em, you're giving up meat if it holds?
Yeah, for the weekend, and it's gonna be hard because it's
Oh, for the weekend.
it's football
For the
Sunday. For the
weekend.
weekend,
You've got to put
not.
more on the altar of the
Heck
gods
no.
than that. Like,
If you
that's
know how
not
much
of a
meat, if you know
sacrifice.
how much meat I eat, especially on a football weekend when it's NFL season starting, yeah, it's a
Listen, Em,
sacrifice for me.
everybody has to sacrifice in their own way.
Come on, what are you going to give up tackle trading? If what are you willing to give up for support to hold?
Come on, Team Tackle.
Dude, you got to be more zen than that. If it breaks down, just play it down. Like it doesn't have to hold, and it may not hold, and the market may not give you what you want. And if you made that sacrifice to the market gods 4,000 times, Mark, and you still haven't quit smoking, I'm wondering if maybe these sacrifices aren't working.
They appreciate the sentiment, though. They appreciate the sentiment.
Yeah.
There's Timmy the Bear right there.
Yeah.
Like, listen, I'm short.
Listen, I think I'm not yet. I'm not yet because you don't have confirmation yet. But guys, I think there's a lot of potential to the downside if it does break down.
Yeah,
and I have a firm belief that we don't get to dictate what the markets do, right? And it's very likely the probability is still on a hold. We're still in an uptrend. The weekly's still in an uptrend. We're holding the 50 for right now. But if it does not hold, you have to have a plan. What you said earlier, Mark, I think was dead on. If it does not hold, you have to have a plan. Emily, outside of giving up meat for the weekend and watching the Redskins lose, what would your plan be from these market conditions?
Well, thanks for the jab. They're not the Redskins anymore. They're nameless. They don't even go by that.
The
They don't even
football
go as
team.
the Redskins. They're
I
the
was
Washington
just about to
football
call out PC Tim for that. I'm like, no, they're the Washington football team. What are
That
you
is
doing?
the best name of all time, PC Tim.
How is it PC Tim's always the one that's not PC?
That's kind of how it works in the world today.
Dude, I kind of like it.
Oh God, but kind of like what Mark said, I'm definitely not adding on to any bullish trades this week. I already have enough that I'm managing. It's more of looking at that support level and saying, okay, what's my plan for trading this down if it does break support, or do I need to add some insurance to hedge my my long positions? So it's all about sitting down and mapping it out and just saying, okay, this is my plan if this happens, and this is my plan if that happens, and then just wait and see.
Yeah, I mean, listen, and you look at bullish catalysts, and here's an interesting stat, because I mean, the reason I'm a long-term bull is because of fiscal and monetary policy, right? Government will spend if they need to, and do you know how many bonds do you think the Federal Reserve shares of bond ETFs, which they've been doing a lot of, bought in the month of August? Any guesses?
I'm curious. So
over under 1 million shares.
Over. Way over.
The number is 0.
Really?
They did not buy a single bond ETF over shares. You've had Fed commentators in the last week about the overheated market. I can't remember the Fed member who said it marvels him how individuals are willing to take so much risk in the face of such uncertainty. Fed bought 0 bond ETFs. Listen, the Fed put exist. It does. I believe that to the core of my being. I don't know at what level it exists. And that has me concerned. The lack of liquidity that the Fed was putting into the market in the month of August has me concerned. The fact that there isn't a stimulus bill even close to being passed has me concerned. And go look at 52 other bearish reasons on the August Trading Justice newsletter. There are a lot of things that concern me out there, but the most thing that concerns me is that 50-day moving average and support level.
Technical breakdown would be significant. Yeah. Go ahead, Matty. Was that Matt coming in, or did I not, or did I hear that wrong? Yeah, no, I'm with you, Mark. I mean, they're all
No, Tim, I was just going to make a joke on what Fed official had that statement, but no, I'm good.
I don't know. I don't know.
It wasn't Karkashi, but I know
No,
that.
he was definitely in the joke.
I see. I see. All right. One thing, talking about the Fed, there was some economic data that the Fed is going to be closely watching over the course of the next couple of years, inflation, and bring up forexfactory.com if you can here, Cody. One of the market movers, in my opinion, that can continue to move forward is any Fed intervention and policy. We all know that the Fed has a meeting next week. Maddie, what were the numbers that you saw from the CPI and the core CPI today? What was your takeaway?
Yeah, both. Obviously, we talked about this yesterday with the PPI report and how the PPI report is that leading indicator coming into the CPI report. And very similar to the PPI report, we saw an increase in inflation against what the expectation was. The CPI report came in at 0.4% today. The expectation was 0.3 and 0.2% regarding CPI versus core CPI. So you've had a little bit of an increase in inflation, this month, but really post-pandemic is kind of what I'm looking at here. And it's a very difficult environment for inflation when you're looking at, what happened in March and April of this year, the unprecedented radical shifts we saw from an economic perspective, from a central bank perspective, from a fiscal, stimulus perspective as well. And so it's a very difficult environment when you see massive shifts in inflation or deflation regarding specifically to a sector in the marketplace. But when you're looking at it from a year-over-year perspective, which is the Fed tracking, it only came in at 0.7% and 1.7% and 1.3% respectively. Now that takes into account what was happening in March and April, and obviously it takes into account what's happening this month as well. But when you look at the post-pandemic numbers, after we did the $3 trillion in central bank monetary policy, after we did the $2.2 trillion, add the other $800 billion, so about $2.8 trillion in total stimulus coming out of the government from a fiscal policy perspective. When I'm looking at the last 3 months of data, I think you got to be a little concerned, and maybe the Fed's going to focus on. I don't even want to say maybe. The Fed's going to focus on the 1.6%.
I think we lost Maddie.
We did, and I was really enjoying where he was going with that.
I know.
He might have just skipped out there for a second. Okay, we'll wait for Matt to come back. But on the inflation data, Mark, obviously, an uptick in inflation.
I'm back.
There you are, Maddie. Go ahead.
Yeah, I'm sorry. But when you're looking at the last 3 months of data in the CPI report specifically, you've had a 0.4% increase this month. You had a 0.6% increase last month. You had a 0.6% increase the month before that. When you're looking at just the past 3 months of data post all this stimulus, you've actually increased 1.8% just in the last 3 months. So the 1.7% year over year, including that deflationary environment in March and April, that's going to give the Fed all the leeway they need to maintain their very dovish monetary policy. But the concern for many Americans is how does that inflation work over time when you're looking at the last 3 months of data and you've seen a fairly significant uptick in inflation in the last 3 months of data. But a couple points within the overall CPI report that, in my opinion, are very important. Just in the last month, used vehicles, let's talk about cars and trucks here, they saw an increase in the last month of 5.6%. Gas saw an increase of 2%. Energy completely saw an increase of 0.9%. So we're seeing fairly significant increases in the short term in vehicle sales, gas, energy products as a whole. When you look at some of the expenses that have the impact on consumers, we're talking food, housing, and medical expenses. In the last year, food expenses are up 4.1% just in the last year. Medical expenses just in the last year up 5.3%. So when you're looking at just that headline number, CPI report increases 1.7%. That doesn't tell the story of what is truly happening with inflation in the last 3 months. And maybe this is just a short-term windfall regarding, all that massive monetary and fiscal stimulus we've seen in recent history. Maybe, but it could be an indication of something much more, something much bigger developing in terms of a trend. My concern, Mark, in the short term, I agree with you. The concern is the 50-day moving average in the short term, no doubt about that. But my concern from a longer term perspective, and one of the reasons why I feel owning gold is so important, is because of that increase in inflation we've seen in the last 3 months post-pandemic, and if this is a larger trend developing on inflation.
And that is obviously something that, Matt, we're going to have to track and keep an eye on, because if it is a larger trend on inflation, maybe the Fed is going to just be accommodative and continue to do it and increase their targets like they've been talking about. Is there anything in next week's meeting that you guys are particularly interested in hearing from the Fed? Mark, you've been concerned about some of the Fed put action in August. Matt, we just got inflationary data. We do have an FOMC event next Wednesday. Obviously, those ones can be market movers. They're always on the docket, and they grab our attention. Is there anything you guys are going to be watching for from the Fed next week?
Man, just rhetoric, right, man? I mean, that's the big thing right now. I mean, we know interest rates, it's really in the rhetoric. When we've seen market moving action over the last 3-4 months to the downside, it's always been because Jay Powell said something to the effect of things are not really freaking good, right? So it's always in the rhetoric. The policy itself probably won't matter unless we have a big drop and the Fed says they're coming out and doing something to calm the market. But we just don't know what level they're willing to do that at. Is it, I mean, that's the big thing. Is it S&P 3,300? Is it 3,000? Is it 2,800? What's the level where the Fed come in and says, hey, listen, we're here to save the day. We're doing something super duper. So that's probably not happening this week. We haven't seen, I mean, one of the interesting things was in the June shakeout. So big shakeout day, lots of volatility on the Friday and Monday that followed. Fed came out and said, and they announced corporate bond buying individual bonds. Market stabilized, took off. They haven't done anything like that. So it's all in the rhetoric. Do they try to calm the markets or do they not? I mean, it really just comes down to that. Could be a really, really significant speech after the meeting by Mr. Powell.
Yeah, we'll keep an eye on it, and obviously we'll break it down when it's happening next week as well. I mean, the inflationary data is definitely very concerning, especially when you track some of the internals, Matt. I found it interesting because I read the headlines too, and I'm like, okay, not so bad. But then when you were breaking down the detail for me, I'm like, holy cow, especially like the used car numbers, very concerning. Food numbers, concerning as well. I mean, Matt, do you think the Fed's going to have any different kind of response to this report? Or are they just setting it up for increased inflation as a part of the plan?
No, they're going to focus on the year-over-year numbers at 1.7%, still being underneath their 2% inflationary target. So I don't think the Fed's going to do anything in terms of that right now, number one. But also, you are just a couple weeks removed from Jackson Hole. And when they made that major monetary change from targeting 2% to now targeting an average of 2%, guys, if you don't think that they already knew this data was coming at them, that they've seen this increase in inflation at over the last 3 months of 0.6, 0.6, and 0.4% respectively, this is why they were changing that 2% inflationary target, because they knew full well what was coming down the pike, and they are going to achieve that 2% target, which means they needed the justifiable reasons to target an average, because they've seen this short-term data, and it is obviously concerning. But that's not what they're going to focus on, because they can't change monetary policy. They had to change the bylaws of the Fed from a 2% target of inflation, because they knew if they didn't, this inflation coming down the road in the short term was going to be very, very concerning and force them to adjust interest rates. Now that the Fed has changed their inflationary mandate, they are not forced to adjust their interest rates to combat the short-term inflation. So no, I don't think the Fed's going to do anything coming up, because they already did that a couple weeks ago at Jackson Hole. And this data that we're seeing in the short term now really makes it very, very clear for me why the Fed adjusted their inflationary goal. It had nothing to do with actual monetary policy and had everything to do with maintaining their very, very historical dovish monetary policy, because of what it means, not to the broader economy, but what it means to the actual financial markets.
Mm-hmm. Mm-hmm. Well, I mean, I'm going to be interested to see what they have to say next week, Matt, in this, or if they're going to go chalk or not. We'll break it down when it's happening. Across the broad markets here, guys, let's kind of flash through them if we can. And Frank, I'm going to put you in charge of technical analysis reading on a few of these.
Sure.
Give me crude oil if we can next. And Frank, I've gotten Matt and Mark's take this week, and obviously the breakdown very significant. I haven't got your take on this one. How are you reading this crude oil chart right here? Sitting down here after the breakdown or the consolidation, now we're below some key moving averages. What's your read on crude oil?
Yeah, for the first time, I've actually thought about it this week. Very nice follow through on that breakdown for sure. You got to, depending on what side you're on, I think either way, you like the fact that we've developed this weekly floor here, right? We've got a very clear line in the sand where buyers are willing to step in, which opens up the door for, if I'm on the bullish side, a pretty cheap trade, right? Stop loss right below that, wherever it is I might be getting in. If I'm on the bearish side, and I do think that this leans to a bearish breakdown, but only if support breaks, right? So way to cover myself there. I do think there is a little bit of short-term room for us to drop further if that floor gives out. How much are you concerned about what Tim or Cody just drew there? We do have some price action, right? They can prop us up. So it probably would be an intraday play. If I'm looking to play bearish, I do think a break of that floor is tradable, but I think it probably almost has to be on the intraday, because I think we need to respect that support level.
Mm-hmm. Yeah, I agree with that as well. And obviously those intraday triggers, just like on the market at large that Matt was talking about earlier, is something that you want to go down to and try to find it and find those identified points so you can build a plan at it. Are you guys more interested in a short position or a long position here?
I would argue that if you're trying to play bearish as a swing trader, I would argue going into the energy sector, that's where my head's at. I'm not really looking to play crude. I am looking to continue to work bearish in the energy space overall. I wouldn't want to, it's just too tight for me on the short side. And on the bull side, I mean, there's just so much now, all of that old history, all of those moving averages on top of us. I don't really believe in crude. So I wouldn't really want to be a buyer. If I'm looking bearish, I'm looking to the energy sector versus the crude oil itself.
Mm-hmm, mm-hmm.
You might not believe in crude, but crude believes in you, Frank.
That is true.
So.
Mark, what's your take on crude oil right now?
Listen, once again, much like the broad market, when things are like battling a support level, listen, I got no problem day trading off a signal from the support level. So you're day trading and you want to play a support bounce. But man, that is a tough place to take swing or position trades at. It's much, much better to wait for. I mean, you just don't have any support. This is the problem with the markets right now, whether it's crude or equities, is that when you have these patterns that develop and there aren't these like huge support levels, man, it's just a guessing game right now if you're looking out 2-3 more weeks. So day trade off a support bounce, I like that. Something I do quite often, but that's a whole, but I can manage a real quick stop loss, right? So other than that, man, it is just a guessing game right now. And when it is a guessing game, what does Noah like to say? Go fishing.
You don't have to trade every chart and every pattern. That's right. I mean, you can find, and Frank, if you're finding better patterns in the energy sector, I know that you do your scannings on like Thursday and Friday. I mean, that makes a lot of common sense to me. Go where the action is, go where the entries are. And by the way, where the action is now, I believe we got Coach Noah Davidson coming on in here. How you
That
doing
is where
there,
the
Noah?
action is.
Yeah.
Yeah, I heard there was action.
You said his name and he just
I'm here.
shows up.
I did. I did not even know Noah was here.
Noah,
Yeah.
So
welcome, my friend. Are you going to run screens for us, Noah?
I am. I need to have somebody let me share screens.
Oh, I didn't realize that was an issue. Give me 1 second. All right, let's go now.
Very, very good. And as we work through the commodity market, let's talk gold here next. Obviously, the development of gold has been in this consolidation for a bit. We've been talking about how we think that's very, very healthy price action. Frank, from a technical perspective, kind of explain that, because I think a lot of new traders are like, okay, if it goes down, we want it to go right back up, but that's not always the case for veterans. Veterans like a little churn back and forth before that triggers develop. Why do we like this kind of action here, Frankie?
Well, because you can't go straight up or down. That's not sustainable, right? You can go on bursts of that, and pretty much everything does, but nothing's going to go straight up for a year, right? Or straight down for a year. So you need the new patterns to develop. And once we kind of, gold was so hot, flying above the 9, just day after day, higher, 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 higher. None of us here were complaining, right? As a whole, Team Tackle are gold bulls, right? So we were all right with it. Maybe we were getting a little bit spoiled though, right? This is very gold-like. I've said it for a few weeks now. I've heard Maddie say it, where after a big pop, we go into some sort of sideways action, right? We build some sort of floor, some sort of triangle before we take another run. And I think if you think about the development of gold over the last several weeks, this is what you want. If you didn't get in on the gold run, back in July or June, you wanted it to take 5. It's basically decompressing without dropping in price, right? It's up or down any given day, but it really isn't anywhere. Week after week, or almost every other week, really, we set up lower highs, but we've continued to hold that same support zone at around 19. The longer that happens, sooner or later, support and resistance will become the same place, right? And then we'll kind of hopefully push to the upside, getting our next movement-based signal. So I think until we see that, and right now, we can either call that yesterday's high, or we can call it the high from the end of August, right? Depending on how aggressive you want to be. If we can come out of that downward sloping trend line while we've held this support level, that's great. That is great. But in the meantime, this is very normal for anything, but certainly for gold, right? How many times has gold done nothing for months? I mean, a ton, right? It's just what it kind of tends to do. So as long as we're holding support, that's a very good sign for the bulls. Now, if that support breaks, I would call it a short-term bearish signal. I wouldn't be bearish on gold, but I would expect price to fall, because that might be the way that this plays, right? We might just keep making those lower highs and holding that support. As sooner or later, support and resistance become the same number and we push to the downside. That would be a decent amount of pressure, in my opinion, if that were the way it went, which would just mean we'd be waiting for it to pull back a little bit further for any re-entries.
Well, and you're right.
And one more comment. I mean, I don't have anything to add to that analysis. I thought it was spot on, but a reminder to everybody that's new, and a double reminder to everyone that's old in this market. I mean, how many people, when gold was going parabolic for those 3 weeks, were panicking that they were going to miss out on something? FOMO, what is this, the high? How many people in the market at the start of last week, when things were like having this ridiculous run up, were like, oh my gosh, I got it. Patience is the name of the game. If you miss the first trading signal and you don't get a good entry, I understand FOMO and frustration takes over, but hopefully the last few weeks and last 6 weeks in gold teach you a lesson that you take with you from now to the end of your days. Hey, catch that first trading signal if you get it. Great, wonderful. If you miss it and it goes parabolic, don't chase the dragon. And what do I mean, Noah, when I say don't chase the dragon?
Well, if we're talking about a golden dragon here, I don't know what you're talking about, because I'm going to chase that dragon maybe just a little bit. Really what you're talking about is just the kind of, in my opinion, anytime I see a strong parabolic move and I feel like I missed that initial entry point, I feel like I've gotten a little bit of distance between me and like this known support zone. So I think it's a higher risk entry than it would be if you're catching it clean off of a base or off of a breakout, where you'd have a reasonable expectation that there's a support zone there to help prop prices up.
Hey, Noah, can you go down to an intraday chart real quick? Because I think that the technicals that Frank was describing is very interesting to me. And I believe on like a 30-minute or an hourly chart, a little bit more time so you can see it all the way from the pivot to pivot to pivot, kind of developing trend line there. Yeah, explain that one right there, Noah, because you see the falling trend line. You might even need a few more days on that. So give me a custom setting, 1 hour up here. Go click on the timeline, if you will, to the
Let's
left of it.
go
Let's do
back
time
down
frame. Give me like
to-
45 days, 30 days, something like that, 90 days even. Yeah.
Yeah, you can see the symmetrical triangle really, with the tops and the bottoms, you're getting the lower highs, you're getting the higher lows. In this case, if I was drawing a trend line, I'd probably go pick one off of at least those 2-3 pivots right there and kind of ballpark that. And that would be this is one of those things where, Matt would say, I don't like the consolidation breakout like that trend line triggers. I kind of like the trend line trigger. It's not a bad way to go if you like the patterns.
But the clearest entry would be above 2000, right? I mean, if you
Oh
get
yeah, for sure. Like and I would say, for a day trader, I'd say entry 1 might be 1980, entry 2 might be 2000, entry 3 would be up there above 2020. And, I think anytime it takes out a resistance pivot, that's a reasonable entry trigger. It's kind of a question of what kind of risk do you have associated with the entry price? Where are you going to put that stop loss? Does it give you a good reward ratio?
And Frank, what you're talking about with the lower pivot highs, lower pivot high, lower pivot high, eventually, if none of that actually breaks out one way or the other, eventually support and resistance just continue to come together and it will force the action one way or the other, right?
Exactly. It's a super pinch, right? It's one of Mark's moving average pinches, except everybody sees it, even if they don't use moving averages. I always say the world will blow up if nothing happens. So something has to happen if we continue on that path, right? Because I don't want the world to blow up.
So, no, I don't want that to happen either. Yeah. By the way, the dollar kind of a doji here today and Bitcoin holding 10K. I don't see anything in those charts we need to update. Next thing I do want to talk about, and I believe we've got Matt here back as well. I do want to talk about corporate earnings here today, Matt. There were some interesting companies that have been in the market's attention span for several months now. Chewy, a 2020 kind of stock, definitely. Oracle, Peloton, definitely one of these 2020 stocks. They had earnings here today, Matt. I know you've got some numbers. Let's go through them one at a time.
Yeah, let's take on Peloton. Let's take on Peloton very quickly here. Peloton reports earnings EPS numbers of 27 cents versus the expectation of 10 cents. Revenue came in above the expectation. The expectation was 566 million. They came in at 607 million. Now, versus the expectation, not a very good beat, but versus what was last year, year over year, a real healthy beat. Things Zoom type revenue numbers there. And they also had an extremely massive increase in guidance when you're talking about first quarter 2021. The expectation was 458 million. Now they're expecting 720 million in the first quarter. Revenue for 2021, they were expecting 2.6 billion. They increased that by about 30%, all the way up to 3.5 billion in their new guidance. So, when you're looking at robust quality earnings reports, Peloton, and it's like I said on Twitter, Peloton, not my cup of tea, not the stock I like to trade, and not a stock I like to that fits kind of my investment thesis. But it's been one of the more popular stocks in post pandemic. So, and when you see such price appreciation like you had in the short term, I mean, this was a stock that, the low price of $17 immediately after the pandemic, kissing off that very, very significant whole number of $100 here earlier today. To me, they showed it. They came, and you got to give them credit where credit's due. And Peloton had a very, very, very good earnings report. Now, this type of market, where it's very this to me is like a Zoom type earnings report if it's reported 2 weeks ago. But in this market condition where it's a little bit skittish, I think people took it as a profit taking. I don't think you can remove it from a watch list simply because of sell-off today. I think it's just a wait and see to see if some technical formation forms here. But the report itself was really, really, really good.
Yeah, and the CEO commentary was obviously very, very positive moving forward. I mean, Matt, you had to take away from this, keep it on a watch list like you're talking about.
Yeah.
Still a target stock, but probably not in the short term, right?
No, and it's not just the response to the earnings. It's coupled with what's happening in the market, couple that with the radical volatility shifts we've seen in Peloton over the last week of trading. This was a very, very consistent stock. You know, breakout, trade it, breakout, trade it,
Yep.
breakout, trade it. It was very consistent up until the last week and a half. But the volatility over the course of the last week and a half really does throw off the technical triggers, stop loss placement. So I do think you have to let the volatility subside, get back to a more standard technical trend here. But as for the numbers itself, if you were a fan of Peloton, you're a bigger fan today. And if you're a hater of Peloton, you're not talking about Peloton today.
Well said.
You're not bringing it up. Frankie, what would have to happen for you to see a next kind of tradable signal here? I mean, now we've got this candlestick that's engulfing the previous candle after a top. I mean, pretty good earnings report, but market response fairly muted here. What would have to happen for you, I mean, to unpack a trade here?
This one's tough. It's one of those that I'll know it when I see it, but it's really hard to envision how it plays out. Do we build some new price action in this engulfing candle and spend, you know, the next week or two chipping back up to a breakout? Do we drift back to that old breakout point, slowing? Because Maddie is absolutely right. We've seen a very noticeable increase in volatility, and not just on the earnings, which makes sense. But if we were to pull back, say into that 75, maybe into the 70 range, a little orderly, see some of that momentum slow down, see some of that volatility drop off, maybe we could talk. This one is one that I have no idea how I would potentially trade it next week. I don't know what it would need to do. I don't think it could do anything that would sell me, I guess, if that makes any sense. I think I'll know it when I see it, but I have no idea what that will be as it currently stands.
Frank, I don't know who's tried to sell you more in your life than I have, but I'm probably up there a little bit on trying to sell you on certain things.
Yeah,
I don't
probably.
think I could paint the argument to even start that conversation in the next week.
No, I really don't have any idea what it would have to. Could it put in a floor next week? Yeah, but I'm not really probably trusting it. So yeah,
But,
I mean,
but even if it does put in the floor, aren't you like, well, I'm just going to wait to see if it breaks out of 100 eventually and then trade the momentum?
probably, you know, if it
Yeah.
were to really establish a nice floor, say, you know, Monday, Tuesday, real boring hanging out,
85,
and then
90-ish.
yeah, and then maybe as we start to capture all those moves, I mean, it would just be more work than it's worth, you know. So
And I haven't done my scanning yet, but I'm willing to bet there's a hell of a lot cleaner charts out there.
Oh,
Even in this
yeah.
crazy
Peloton's has
environment.
had two great trading signals in the last 4.5 months. One was a breakout in June, clear resistance level after taking 3-4 weeks off. The other was just a few weeks ago, clear resistance level after taking a good 6 weeks off of this, 6 or even 7 weeks off of this meandering sideways slight uptrend. Know the stock's personality. The two best trading signals have come after multi-week consolidation.
Chops,
and chops for a little bit, forms a resistance area, then breaks out. Once again, just be patient, right? You don't have to chase it. You don't have to chase it. Know the stock's personality. Wait for that particular pattern to emerge again.
Yeah, and I think that's pretty on point there, Mark. I mean, Peloton has been a breakout candidate, and those two breakout patterns you looked at, one was an ascending triangle coming into it. The other one was off more of a standard retracement that hesitated in a high base coming into it. But in both of those moments in time, you had multiple weeks of consolidation before that very, very strong signal. I think that's what you wait for here on Peloton. And if you miss it, fine. You're also not going to miss out on the, you know, drop in price to 70. So I think you got to wait for the proper setup, wait for the consolidation, and then look at a potential breakout.
Next, Maddie, after Peloton, we had Chewy. Yeah, another one of these market darlings, right?
Yeah, let's take a look at Chewy here. Now, Chewy did not have the show me that Peloton did today. Chewy came in at a -8 cent. Oh, and by the way, on Peloton, guys, I forgot to say this. this was the first quarter Peloton's actually showed a profit as well. And so that's good for Peloton. Chewy, on the other hand, comes in at a loss of -8 cents a share. That was against the expectation of -15 cents. So a slight beat, even though a loss is still a slight beat versus expectation. Revenue came in line at 1.7 versus 1.6 billion. They did see a 47.4% increase in overall revenue from quarter to quarter, year to year. But guidance they said they increased guidance. But this was, again, one of those, we're going to increase it by a couple pennies and call it an increase in guidance. So I'm not taking that. Peloton, Kroger today, those are legitimate increases in guidance, and that they need to be celebrated to a certain extent for that. But Chewy, slight increase in guidance for the third quarter alone. Again, companies do this just so people talk about them, just so they get in the headlines of increasing guidance. But to me, it was really kind of just, lukewarm. Market condition is fairly, skeptical right now. Report decent earnings, lukewarm earnings, neutral earnings in this environment gets beat up. I mean, this is a stock that's, was up a good 35% in the quarter, guys. Even and that's from the, from the bottom to the high. But you still got to show, even after the retracement in the last week and a half, you still got to show. They didn't show today. Chewy getting beat up, and rightly so.
Mm-hmm. But nothing really here is going to take it off of a radar from a long-term growth perspective, Matt. Do you think? I mean, they still had some decent stuff in there. I mean, I understand the market response here is down, from that perspective today, but I think it still could be on a target list, don't you think?
Yeah, I mean, yeah, it could be on a target list, maybe short underneath the 50-day moving average. I don't. I've seen these earnings numbers in the last week, guys, where you saw growth companies coming in at a 47, 48, 50% increase in growth year over year, and they got smacked and beat up.
Mm-hmm.
You still got to realize, guys, and when you report basically neutral earnings in a massive growth environment where you're dealing with Chewy with a massive PE ratio, they got to do something. Like Peloton, the sell-off is, some of it's just market related, but in terms of Chewy, you got to show something special there. You got to justify that. I mean, you went from $20 all the way to $75 in the last 6 months. You got to show some robust growth there. You got to show some robust earnings. You got to show some forward projections that are like, this justifies the mentality. In Peloton, again, not my cup of tea, but at least their earnings justifies that mentality to a certain extent. Chewy here, again, for it to be technically driven, you need some time for this to set up. But to me, a neutral earnings report in an environment that needed to see something better than that, no, Chewy's off the list for me.
Off your list. The market responses to these earnings report the last couple of weeks, Mark, has been, obviously very different than it was for some time before that. Are you reading into that, Mark? Is that just a function of the current market conditions, the volatility? We're not seeing these blow off, run off tops. Is that just the risk attitude right now, Marky?
Yeah, I mean, listen, everybody's skitty. Hey, listen, once again, Dave Portnoy was selling and closing because he was over margined into the close. And that you think about that cumulative psychological effect of like the first time a new trader has to like, oh my gosh, if I don't close positions at a loss, something's going to happen, and they don't have the experience, man. I think there's a lot of that going on right now. And make no mistake, algos are merciless. When those short-term downtrends pop on, they have no fear. They will keep pressuring it down until legitimate buy signals come, which when you run up as fast as we have, to reiterate what has been the theme this week, and there are no support levels, are hard to find. So it's just a really skittish environment everywhere right now. Mm-hmm. And so eventually that will calm out, because it always does. But until that happens, man, it's good theater. Just be careful. Yeah. Just, tread lightly out there.
All right, next one, Maddie. I think we had a third one we were going to look at. Oracle, I believe. On
two more. I got Oracle and then I got Kroger. Let's jump to Oracle very quickly. Oracle here, very similar to Chewy in terms of just the actual, just kind of
type earnings report here on Oracle. They did have a fairly decent beat on EPS numbers, and that's probably what we're seeing in the price movement earlier today before you saw the sell-off here in Oracle. I mean, you had the price movement kind of breaking out of that previous pivot right there at about $59 earlier on the overnight action. You actually opened up today at about $60, but I mean, the market today has been selling off, right? It's been a little volatile, right? A little bit of a roller coaster, but for the most part, you've been selling off here today. And so a lot of these earnings reports that gapped up just kind of went along with the market selling off a little bit. But Oracle, to me, 9.4 versus the 8.6 in EPS numbers, a decent beat on overall EPS numbers. Revenue, another beat on revenue, 9.4 versus 9.2. So a slight beat on revenue numbers, a pretty decent beat on EPS numbers. Growth was 1.6% year over year, which again, we're not talking Chewy, we're not talking Peloton, we're not talking Zoom, we're not talking Slack, we're not talking anything like that. We're talking Oracle here. So 1.6%, don't really get too fret about that. They cheated on guidance as well. They did the they did the old Chewy thing. Let's increase guidance by 2 pennies and call it good. Literally, I'm not kidding. They increased their guidance from 94 cents to 96 cents, and they got it. I just think it's so cute. Like honestly, guys, there's ranges for these things. It's like 96 cents by $1. There's ranges for these expectations, and they literally just up their lower end of the range from like 94 to 96, and then all of a sudden, wow, everybody buy, beat on EPS, beat on revenue, increasing guidance, triple whammy. Let's go get it on here, and then the market, it's like whoa, hold on,
Wait a minute.
wait.
So their evil plan works while the market's closed.
Yeah.
But falls through right when it opens.
Yep. when the pajama traders are like reading those reports, they only read the headlines, right? They don't read into the detail. Wall Street reads into the detail, and Wall Street's like, "Oh, you think? You think that's good? We're going to show you that's not that good." I didn't take it as good. I took their overall earnings numbers as very, very neutral. Not bad, not good, just neutral. I don't believe in the increase in guidance here in terms of Oracle, but overall market response, tried to break out. KISS got just absolutely demolished back down. The problem for Oracle here is going to be a potential breakout if you're looking at it from a buying opportunity. That fake out gap up, sell off is going to just drive technical traders who are data driven absolutely crazy. Yep. And so even though I do see the potential of a breakout here, you are talking about an all-time high breakout right above that $60 level. And if we get a little much better of a technical setup, maybe in the next week, 2 weeks, maybe at that point, Oracle has a really good opportunity on that breakout of that $60. But I need to see some consolidation here. I need to see some support levels form, and I need to see multiple tests of those support levels because of the fake out. So to me, neutral on the earnings. Let's give it some time on the price action.
Mm-hmm. Frank, when you see a candle like that as well, I mean, I'm enjoying the way Matt's breaking that down. You have the fake out, the candle took off to the upside, looked like it wanted to run. It did not. When you see a failed breakout like that, Frank, how do you approach the next couple of weeks of trading action? Are you watching for the, consolidation, a breakout up there at the high? How do you take this one in?
Generally, I'm not all that interested, to be quite honest with you. When things break out of clear resistance on earnings, if they run off of that, it really catches my attention because it shows me that the belief is there. The technicals are there either way, right? A break of resistance is a signal. If it doesn't run, it messes the charts up as far as I'm concerned. Matt nailed it. It drives a technician crazy. So that chart becomes so gross. It has to basically reset. New things have to develop. Again, I don't know what those things would be. I can't see them being in the next week or two personally. They might, right? I don't know the future, but I generally, if it doesn't catch the break and hold it, it really concerns me, at least short term, because it messes up my charts.
Mm-hmm, mm-hmm. Last one on earnings, Matt. Kroger, the grocery store company and food company here, consumer staple, a little bit different kind of play here. Matt, what did you see in the numbers?
Yeah, Kroger here, you know, I said this on Twitter and I'll say it here in the halftime report. Kind of like I've said about Walmart and Coca-Cola and some of these other more value-driven, you know, plays out there. If you're looking for boring, there are some plays out there for boring. MGM, Delta might be setting up, Kroger, Walmart, Coca-Cola, Disney. You know, there's an area for boring in your portfolio. Now, there are sometimes I look at some earnings reports, and I know I'm talking to everybody here because it's not just me. There are sometimes I look at the market response to an earnings report, and I honestly just am like, I don't get it. I don't get it. And this is one of those times in Kroger. Food-based cost increased 4.1% in the last year. Does anybody here think food-based costs are actually going to decrease in the next 10 years?
No.
No, nobody does.
Are you
Okay,
sure?
I'm pretty
No, it does.
positive. I'm
Well,
pretty positive.
if we're all giving up meat, maybe it will, but I don't know.
Mm.
No. Plant-based groups are included in food-based cost. So giving up meat and plant-based food is more expensive. So it actually increased. But Kroger comes in here and they report 73 cents a share versus the expectation of 51 cents. That is a very good beat on EPS numbers. Revenue came in line. It came in above the expectation of 29.7 billion, but it did come in at 30.5 billion. So a slight beat on revenue, big beat on EPS numbers, 8.2% year-over-year growth, 8.2% year-over-year growth here. But if you want to throw shade at Chewy and Oracle and all the other BS companies that do their nonsensical, you know, increases in guidance by 1 penny, here's Kroger that says, hold my beer, we're going to increase by 30%. So, you know, Kroger, a real healthy beat on EPS numbers. Kroger, a decent year-over-year revenue increase at 8.2% for a food-based company like Kroger, and a big-time increase in guidance. I think this is a stock where you don't look to trade Kroger. I mean, how many times has somebody been like, hey, do you see the potential breakout on Kroger in the scouting report meeting? And everybody's like, yeah, why?
I bring that up all the time, and I always get vetoed.
It gets vetoed every single time. And quietly in the quarter, in the last, you know, month, it's still up about 8%. So we're not talking Zoom, Peloton. We're not talking these aggressive type companies. We're talking Kroger, food-based company. But this is a company that I would be looking to target on any dip in terms of an investment opportunity.
You know,
I
Mark,
agree with that.
Mark, this is the kind of stocks right up your alley. Are you interested in the stock as well? Is it on your target list?
I haven't lately because I've become a 22-year-old millennial. Did you not get that memo? Like that's the old Mark from like 4 months ago. Right now, if it doesn't have a volatility of 87% on the weekly option chain, man, that's just too boring for me. So.
Oh, can I sign you up for a $32 naked put 50 cents above the 200-day moving average here on Kroger, Mark?
Yeah.
I know you're over leveraged, but I mean, if Davey Day trades,
oh shoot, listen, if I am over leveraged like every other idiot out there who's been like doing all kinds of nonsense, trying to manage as much as you can, right? So yeah, that's I like that. I like that. Listen, Kroger's a good company.
The only problem with the Mark is you and many of your ilk, okay? People that love selling their naked puts and their credit spread. You guys have been just absolutely spoiled over the last 3 months.
Oh, it's 3 months.
You guys have been so spoiled with the volatility measurements that you're like, oh, I'm getting 12, 15% for a 10 delta naked put.
Oh, we've been like, it has been a beautiful world. Okay. It's not, it goes more than 3 months. It goes 5 months, man.
I get it. And you can hear it in your voice how spoiled you are right now. So you can only get about a 5% projected ROI off margin. So you're not getting a lot of revenue here. What you are getting is an opportunity to buy a company after a slight downward movement in price, sitting above the 200-day moving average, and you get a little cash flow for the opportunity to buy it right above the 200-day moving average.
Listen, I've sold, I think, 3 naked puts on Kroger this year. I will sell puts on naked on Kroger again. I like the company. It's just one of those nice, steady, boring companies.
Oh, it's
And,
such a, and that's fantastic. That's a beautiful thing. Stay bored.
like, listen, there are just a few companies out there that I really like Southern and Altria and Kroger. And I'm not going to have, like, just like I'm not going to have all my things in tech, I'm not going to have all my plays in all boring either. AT&T comes to mind. Listen, there is room in
That's
your
not boring.
portfolio.
That's just gross.
There is room in your portfolio for boring dividend companies, boring companies. It sure makes times like you've been going through in the last 7 weeks a lot less stressful, a lot less crazy. So, when you're designing your portfolio and the allocation for different things, it's not all Apple and Tesla, my friends. That those type of companies have their place, but so do some of the boring companies. And it doesn't have to represent a large percentage of your portfolio. I mean, Old Money Homes, it's going to represent a large percentage of his portfolio because that's how he approaches it. But find a couple of those companies that are just boring, less return, but more stability, kicking some dividends over 15, 20, 25 years. That's really going to pay off for you.
Mm-hmm, mm-hmm. There's a couple other corporate news items that grabbed my attention, Maddie. And then I also did want to get to charts with Frank. Frank, I'm sure you brought in some charts.
I got a few, absolutely.
And Emily, that's always one of my favorite things in the halftime report. When Frank starts going through his charts on the weekend, it's a great thing to be able to watch, right?
If you notice, I only come here on Fridays.
Thanks, Em.
There you go. There you go. One of the news items actually was just on ByteDance. You can bring up Microsoft or Oracle or even Walmart. Matt, it sounds like President Trump is firming up on his 9/15 deadline to sell TikTok. It's 4 days until this deadline. Do you think we're going to get a deal on this, guys, over the weekend? Is this something that is on your radar right now?
I don't know if I care.
Well,
I
my long calls care.
Yeah.
My kids care. My kids care because they don't want it. They don't want it to be taken away. That's as much as as I'm involved in this.
I want to change my statement. I know I don't care.
Listen, the whole TikTok news is actually significant. My daughter says, Dad, I'm going to record a TikTok video, and then she does something with the cat. So it has implications in real life. Takes some of the steam out of some of the things. The fiscally, kind of impact them, but is symbolic of the larger China problem. I mean, it in and of itself is not a big deal to the market.
I made a promise to myself today. This was a no politics day for me.
Yep.
This is 9/11. I'm in a day of remembrance, and I am not going to allow any political type scenario to impact my emotions at all. And the TikTok scenario is a political conversation. So no, I don't care today.
No.
But I probably won't care tomorrow either.
Or, well, we'll see if we care on Monday or Tuesday. If something does happen, we can come back and revisit
Well,
it.
I'm just I know the deadline's coming up over the weekend, but how many rumors have we had in the last
I just want this news to go
6
away.
weeks?
Hopefully they can get something done so
You know what?
it's just done.
I said two things to myself today. I said, no politics today, number one. And number two, I am not going to be, there is nobody that has the ability to get me to talk about Brexit today. Those are the two things.
I'm not bringing up Brexit. There's no question about that. That news I never grabs my attention at all. The other one, Matt, that did grab my attention though was Tesla. They've got this upcoming battery day on 9/22. Elon is tweeting all about it, talking about it. And I also did see a report that they're exporting cars from their Shanghai factory and from production over there. I'm most interested though in the chart response here this week. And Frankie, I wanted to get your take on Tesla. We had Tesla pulling back into Monday, obviously, and then Tuesday you had the news where they weren't including the S&P. It gapped down. To me, this is kind of in a no man's land type of scenario. Frank, how do you unpack this chart here from just a technical perspective?
Well, you're right. We're in no man's land today. And that's probably a good thing if you're looking for a trading opportunity on Tesla. Much like so many things in the market, we've got the weekly low and the weekly high, and we're somewhere in the middle, although more things are getting towards the bottom today. But we've got a very clear 2 lines in the sand, at least price action for the week. It also happens to very nicely coincide with the 20 and the 50 SMAs, right? So if I'm looking as a buyer, I like the development here. If we can create that higher low, take out that resistance. This is a much better trade towards the end of next week if it happens this way, where we create a higher low, right? We hold that 200. Those moving averages have a chance to kind of push down a little bit more, and then we take out this weekly high, getting rid of everything, right? I call that the pullback of the pullback. I know it's probably got a better technical term, but I'm a simple dude. And so if I'm looking at it from a bull side, that's what I'm looking for personally. If I'm on the other side of it, that support level at the 50, that's the old breakout point, right? We remember that breakout. If that gives out, I mean, there's just not a lot of support. We've got a ways to go before any significant support level. So I would expect more downward movement. We got to wait for price confirmation. Right now, I could say up and you could say down, and one of us will be right. But the simple reality is the battle lines are drawn and we're in the middle of them. And until we can take out one of them, both of us are just hoping that we're right this time, right?
Mhm.
With the level of retracement we saw here on Tesla, and Tesla is by no means alone here. We saw it in a lot of the tech space, but in the level of retracement we saw, it is almost a certainty you establish some degree of lower high, whether that's the kiss off 400 here, or whether that is it breaks 400 and gets into 420. And anything can happen, but I don't see a scenario where you just V-shape here without forming some degree of resistance point. It's throwing a monkey wrench into those charts, guys. And I think you gotta wait for it to clear out. We've been talking about that all week long, that yes, this is a buying opportunity, but you got to see these things shake out first. You can't just blindly gamble with your money. And that's what you're doing by doing anything right now until the market confirms. And these trades in Tesla, Apple, and I mean, throw a dart at the Wall Street Journal right now, but these trades, they don't look good until that market confirms. And so, yeah, am I looking at Tesla, Apple, Facebook, and the likes? Absolutely. But to me, and I'm looking at Tesla on the weekly chart, and I'm saying, oh man, that kind of looks decent on the weekly chart on Tesla. And so I see it, and I see it above 400. I see a trigger above 400 here, which I feel could be an excellent trigger. But you got to see the market shake out here. You can't just blindly just gamble money in this market condition, not when you don't have an edge one way or the other. Patience is the name of the game right now. Wait for the market to confirm. If the market confirms above those levels we've talked about all week long, you're going to have great opportunities in Tesla, Apple, and Facebook. And like I've said many times, and I'll say it again, if these support levels are confirmed historically, it's okay if you give up 2, 3, 4, 5, 6 days of price action because you have a consistent trend from a historical perspective. Be patient. Let the market shake out first, and then let's get it on.
Yeah, I love it. I think that's exactly the right analysis from a technical perspective. Frankie, speaking of technicals and charts, man, if you had any of the corporate other corporate news, happy to bring them up. You have any other companies you want to talk about before we get into charts with Frank?
Say again.
Do you have any other corporate news items you want to make sure we hit before we go to charts with Frank?
Apple threw a big dagger today by changing the bylaws at their Apple App Store. That is obviously in response to the Epic Games. I am so enthralled in this, like a John Grisham. Like this might have, it was it John Grisham who wrote like the Pelican and
Yeah,
the firm? Yeah, it was John Grisham, right? I'm all over this. Like there is some hidden stuff going on behind the scenes. I am tinfoil hatting this one. This is a novel playing out for me. It's fantastic. But outside of that, no, I'm good. I do want to give Dina, awesome halftime member of our team. Dina, I always like to support our crew out there. You are certainly part of that crew. Dina released a book here today. It's getting published. Dina, make sure you let us know when that gets put on Amazon. We'll get it out there on Twitter. We always like to support our community, and publishing a book, man, I've written a lot. I know everybody here at Tackle has written a lot in our lives. I know how challenging that is. Kudos, congratulations. That is amazing, Dina. We are so happy for you.
Absolutely.
Awesome.
That's
Congrats,
awesome.
Dina.
Congrats.
Yeah, I'll pick up a copy. Yeah, drop
For
the
sure.
link, Dina, whenever you get it, man. We will definitely be happy to push that out there. And very, very cool. Very cool. All right, Frankie, you are up.
Oh,
my
did you
friend.
guys talk about the Tesla upgrade though?
I found it to be interesting. I don't think I
That's such a
mentioned it.
cute upgrade.
Mark, did you hear this one?
That's so cute. Let's
UBS.
upgrade. Oh, UBS. UBS is basically saying we don't like Tesla. That's what
UBS upgraded the price target from 160 to 325, but they kept the stock rated as a neutral.
without upgrading the stock to a buy.
They're just like,
so
all right.
cute.
They're not fans.
Oh,
Right.
you know, you can really start to tell the psychology of certain individuals through just their upgrade and downgrade process. And Wall Street upgrades Tesla all the time from a price, but they're like, I am not putting that as a buy. You are not making me own that.
It's not so subtle, is it? All right, Frankie, you're up, my friend.
All right. All right. Let's see here what we got. Let's start with the Bulls. It's always more fun to start with the Bulls, right? Okay, I'm going to start with somebody who could be one of either one. Let's look at Xerox, XRX. Now I know that we've talked about these guys before, right? They've been in this real big sideways range. We're bumping up into the top of that range, which means one of two things is about to happen. Either finally we can break through, right, which I would interpret as a pretty good signal to the bullish side, or, and probably more likely, is we get smacked back down again, right? So I don't know if this is going to, I think you could, depending on you, might have it on a bull or a bear list. I think it could find its way onto either side, but I definitely think with where we are price wise, I mean, anytime we're at the top of a range that's developed over several months, I think it's interesting and worth keeping an eye out for. So I don't know the trade other than a breakout. I don't really have a lot of faith that that breakout occurs, but I would be interested if we were to take that out.
I would be interested just for nostalgia purposes. My dad used to have a small business back in Kenya where we used to do a lot of printing, and we used obviously Xerox products all the time because it's a toner company. So I would be interested just for sentimental reasons.
So fair enough. Fair enough. I can get behind that side of things. I think right now it might be a little bit of a K trade developing too. Whereas if we break support right now, I'd have that around 18 and a quarter. That would be a sell. Confirmation off of resistance holding, and hopefully something else develop between now and then, or the break itself. You know me, if it breaks, it probably isn't going to break, but if it does, I'm probably very interested.
Yeah, I know. I mean, it's a setup that I cannot argue with. I think we talked about this the other day as a crew as well, and I wouldn't veto it. I wouldn't fault anybody. It's not my kind of trade, personally, Frankie, but it's clean though. So maybe it should be my kind of trade, but I see it for sure. And I know Carl Icon's been building some positions here, and Mark, this is a stock you're interested in, but yeah. Good one, Kay. What you got next?
Very interested in there. What about Target? So Target had its big gap up on earnings, continues to drift down. I've seen some decent price appreciation this week. Could I sign anybody up here for a break of basically, I'm going to call it the high from this week going back into Friday. I'm going to call it 149. If you want to round it to 150 for the round number, I'll let you.
30 or an hourly there, Cody, if you can, because I think that's a really interesting flag kind of trigger here developing, in my opinion. So somewhere around that 148 is where you trigger. Yeah,
somewhere between 148 and 150, and that probably depend on you, right? As a trader, I'd like to kind of take out those highs cleanly, if at all possible. So I'd have that just shy of 149, personally. But the 150 is a big round number, and I know some people might prefer that. That would give me confirmation, a little bit of a mini break, upward movement in price. I don't know. I've been interested in this pullback on Target. Hasn't done enough to get me in, which is probably a good thing. But I'm starting to get a little more and more interested. A little bit of a flag on top of a little bit of an intraday breakout. That one will be one I want to discuss with the team this afternoon for sure.
Back on the daily for a second there, Cody, if you can. I'm interested, Frank. You know, I like these little flag patterns, and we broke down the earnings report a couple of weeks ago, Matt, and we were talking about, and we've been talking about this for the last month or two.
Yep.
What has to happen after a report, after volume, after volatility, to get us set up to develop? Matt, what's your read on this target chart?
I like the development we've seen on target, especially in the last few days. It's you know, even though we broke down last Friday, it's still kind of held its trend, and it still held that pattern. That 30-minute, you know, hourly trend line that you're looking at really leads to, if you do break the triangle. And again, you know, Noah correctly pointed out, those are not my specialty. I'm not a huge fan of triangle breaks. But if you do break that triangle, right, you know, right there in the range of 148 to 149, I think that's a positive mentality, number one. But number two, if you can reclaim that 150 level, that 150 level is a fairly significant support level. It acted as support right there about a week and a half ago. It was kind of clinging into that 150 level. You're breaking back up above that whole number of 150. And so, yeah, I think aggressive traders would look at target and be like, hey, listen, if you break that trend line, I'm rocking and rolling here, and I don't have anything to say. I don't have any shade to throw there. I just think that if you can give up that additional dollar and wait till it gets above 150, I just think that is a much, much, much higher probability of success here, given that if you break 140, you're still, I promise you, I know this, I know you technical traders out there, if it breaks 149, you're still going to stare at the 150 level, hoping it breaks above 150. But if it breaks a 150, you're not staring at anything. You're just saying, ride it till it gets back into 156.
Yeah. Yeah, I like it. And those triangles, you know, up here after an earnings report like that, even though it may not be your favorite pattern, Maddie, I mean, you still, you know, you can identify entry points and stuff like this. I like this pattern after an earnings.
Yes,
After
I can identify an entry point on a triangle. Yes.
Absolutely.
Good man.
I
Good
think.
But I think you make an interesting point, though, Matt.
Back.
That, you know, could be that extra dollar could be a dollar well spent in the form of confirmation. It's not like it's an extra $5, right? That's really going to significantly alter your risk to reward.
Yep.
Yeah.
All right, Frankie, what do you got next?
How about Ally? ALLY. Little bit of a break, right? Nice pop and nice, pretty orderly retracement in the over the course of the week. Could I sign anybody up for a retracement here? We got all those moving averages kind of below us, the old resistance, active support. Maybe we have a little more room to go before we're testing those levels. Could I sign anybody up for a retracement here?
I see it. It's clean. Yeah. Yeah. I mean, you got the breakout, old resistance, new support kind of developing. The little retracement that you've developed. I mean, how many bars is that? About 4 red bars?
Yeah. So basically, yeah. So off of the basically this week, right?
Yeah.
Had the pop early and then have drifted down.
I like it a lot better as a position trade with maybe a wider stop loss and a broader target.
I think that's fair. I think that's a fair way to.
I like the space as far as long term. But yeah, I like it much better as a position trade. I think a swing trade you could get stopped out easily on it.
So yeah, I would give it some room. But I tend to believe in giving, you know, a bit of room on swing trades. I'm kind of a wimp that way. All right, BLDR. Paul brought this one up. Also in my list, Paul, for a little bit of a breakout candidate here.
Yeah, that's clean.
We had that one little stick your head above, right? So we can
endlessly. Yeah, we talked about that before, but I think it'd be helpful right now. How do you approach the tail up there?
You go with Matt and you trust the evidence. I think that's the best philosophy to have. What happened when we pushed through?
Go to an intraday chart on this one.
So if we go into an intraday chart, let's see, you know, if this was just a.
I don't care about that tick. Is all that.
So that's an open.
That is an open on a cash.
Yeah, that's a clean shot. Yeah. That's a clean chart.
And I think Matt, and you've definitely sold me because I've long agonized over the, you know, what to think about the tail, right? And you've definitely sold me on the, hey, go look at the intraday, see if it was a tick on the open. If it was, okay, don't worry about it. If it wasn't, respect it. So I'm with you
Well,
on that side.
yeah, and I'll just repeat kind of what you said too, Frankie. I do think you got to let the evidence do the talking here. It's a debate that technicians have had for as long as I've been around, the wick or the body, right? But to me, you got to take it as a collective, looking at the evidence. And I just think on when you're looking at this, you got a fairly clean entry there. And right there underneath that 32 level, it's also one of those whole numbers. If you had multiple wicks above that, maybe we have a different conversation. But there's so many times in the market where the market just moves on the cash open in that first 30 minutes that creates some volatility and then it settles back down. I wouldn't be concerned about that wick. Now, to me, in this market, I think you need to get confirmation, right? But that confirmation is more about what the market is doing than it is about that potential wick. And so the wick certainly can play a role, but for me, I just like to let the evidence do the talking. I got a cup and handle formation with a horizontal resistance line at 32 and an increase in support from 27.75 all the way up to about, that 29 handle. So you got your increases in support, you got your horizontal resistance, you got one data point above 32. You got to discount that based on the evidence at hand. So for me, you got to see the close simply because the market's crazy and volatile. But outside of that, you got a clean entry above 32 here.
So yeah, you sold me. You have sold me on that for sure. All right, one more breakout, and then we'll look at a couple bears. CE. Solence. I don't know if I said
Carbon
that right.
Emery Insurance.
There you go. There you
short it.
go. Carbon Emery Insurance. I can live with that. So we've really kind of and chemicals as a collective unit have held up okay this week. Some of them better than others. Sherwin-Williams just doesn't seem to care about anything at all anymore. Just likes to. It's still sticking with Davey, day trader, Mark. You might introduce yourself to them. But these guys, nice clear resistance. 10 just north of 107. Could I sign anyone up for a breakout here?
Yeah, you can sign me up.
Yeah.
Awesome. I appreciate that, Em. See, when Em's on my team, now I know that I'm keeping these guys in my watch list.
I don't go against the queen.
Nope.
I'll sign up,
she-
but I'm going to read the fine print before I take that one.
Oh, come on, Noah. That doesn't sound like you.
All right, I'll play contrarian.
All right, I'm all in.
Do you have any? You got cheap risk here, Frank, which is one thing I like about it. So you know where your entry is. Your stop loss could be pretty tight. Do you concerned about the left of the chart there? You got a few pivot points back there that would kind of, pose as some targets potentially. A couple of them are pretty tight though.
Yeah, that's a very fair question. I don't think there's anything that would concern me too realistically until that 110-ish area, which is where I would want my first target. But with the way that these characters move, I think we could probably make that work, risk to reward. It would depend, a lot on your rules and how you got in too.
Yeah, and you always want to kind of put yourself in the mind of what was happening to create that 110 pivot. That 110 pivot got hit in a bearish downtrend that was getting smacked in by the marketplace, and it hit a downward moving 20-day moving average. This time you have an upward moving 20 period moving average actually aiding as the support level. And so, yeah, you got to be concerned a little bit with 110. But if CE is what you're looking at for a potential breakout, I don't believe that 110 would stop you from taking this trade, given that that was more a moving average type move down than it was anything else.
Yeah, and I think that's a little closer to 111 personally. I know it's not a huge difference, which would mean, again, I think that would be a very logical, sensible place for a first target. I would want that pivot to be my first target, which means I would want that to be 1-to-1 or better. But coming in off of today's high, that would allow me to put my stop loss as low as below yesterday's, the day before, the 9 EMA. So I should get quite a bit of wiggle room to at least theoretically feel comfortable from a risk to reward perspective. So it is a good question, and if it does concern you, I certainly understand that, Tim. That and there's no shame in
Well,
that.
even at 110, 111, you probably can get 1-to-1 R to R with that tight risk. So
Yeah, I mean, that's why I like the trade is the risk reward seems very easy to manage here.
Yeah, exactly. It seems like a pretty easy trade to plan out. Risk reward's going to be there. If you get, a good run in the space, these guys definitely will run with the space as they have shown. So, and cheap risk, like Maddie said, should be a pretty cheap risk. On the bearish side, a few of my bears have just went crazy today. So I guess on the one hand, good for me. On the other hand, the charts don't look as much fun for the halftime report. So let's look at True. True is still battling this support line. We pierced it early in the week, did not close below it, rallied up off of it. So I still have these characters in a breakdown list. I don't think they've broke support. I think you're looking at probably a close below 83 for confirmation, or at least I am.
Dude, there's a lot of patterns like this developing, and I'm interested. I mean, whenever you get these support zones, and it's a very simple premise. Support is strong, but if support fails and you get the breakdown, you've got all that clear air down there. I mean, first target would almost be all the way down to 70, right, Frankie?
Yeah, I mean, there's definitely room to run here. I'd probably call first target 72. If you wanted to, you could call it 76. There's room, right?
Room.
There's room to run on these guys. If we're looking for something a little cheaper, a little more mellow, AIG would also fit that bill. Really liking the
don't even have to look at the chart.
I know that Matt's in. I was just gonna add this one to the stock report list automatically. But when you look at the chart, Matt, does that get you in twice? I mean, look at that nice
anybody
cup
vetoes
and handle.
this, in the scouting report meeting, I have some banking tinfoil hat stuff I'm gonna be saying. So
there you go.
I'm in 100%.
That literally is one of the better shorts I've seen in a long time. I mean,
9 out of 10 bears
happen
agree.
to a better company.
Well, I mean, and one of the things about it is, and one of the reasons I like the shorts is that when you've had these rallies over the last few months on AIG, boy, they've petered out quickly. There's just not a lot of sentiment there. So even like they went up and then just immediately died. And I mean, there is not the sentiment there at all. If that breaks down, I could see that be a bloodbath real quick for AIG.
Yeah, that could be pretty ugly. Another one that looks very similar.
Hey, very quickly, just to add a little gas to this fire we're building on
all
AIG.
right.
Look at that weekly chart. That will give you a very clean picture of if that support level is broken, what could happen to AIG.
Yeah, no, this is one of the better shorts I've seen in a while. I really like it.
That's pretty nice. Yeah, and you look at everything, and it just looks better and better. We're sold.
I mean, it's got everything you need. Below weekly moving averages, clear support level, no sentiment. Great risk reward. That is a quality short. I might actually even short that.
Oh, there we go. Yeah, wow.
And when you make money shorting terrible companies like AIG, you need to give some of it to charity just to offset the negative karma that AIG has put on the world for the last 12 years.
Now, are McDonald's, McRibs, and Coke's charity?
They are not charity.
Well,
giving money to corporations that make up to $1 billion. Nope.
I think we have different definitions of charity.
I think your kids count as charity, so just take them with you and get some Happy Meals.
There you go. There you go. What about UNVR as a little bearish retracement?
I like it. I see
This
what
felt
you
like
see.
this felt like a Noah one. When I found it, I knew Noah was going to be on my side. I have a philosophy in life. It's to know your Noah, and it's treated me right.
I smell what you're cooking there with that little kiss.
Yeah, that's a nice pattern.
That's like all the moving averages showing up for a little bear party. That's pretty neat.
That's a nice pattern.
Just a nice little spot. Now, Tim, I know you love Spotify, but can I sign you up for a bearish breakdown on Spotify?
Dude, there's so many of these high flyers that are now rotating over like this. I have no problem with short-term pressure on Spotify. If it breaks support, you've got room down. So
there's
and I love the company. You guys know that.
You're a big fan, but there's just not any support. And you're right. You're seeing, OKTA looks very, very similar, and there's a lot of, candidates that look like this. but they did not have a chance to build any support because they flew up so high. So definitely like them. Now, probably my favorite bearish breakdown, even more so than AIG, although I don't know a lot about this company.
Wait,
So
hold on real quick, Frankie. So who signed up for the short? Who's like, yeah, I see it. Who's on board with it?
That's Tim.
Tim, you're on board with the
I
short on
am.
Spotify?
You've got an M pattern developing on the daily chart.
Oh,
Yes.
no, I don't even know how to think about this any longer because you're so emotional about
No,
Spotify.
and another reason I like a short on Spotify, and some of the things I hate shorts on is I hate shorting the cheesecake factories and theaters
Yeah.
of the world, and I
Especially right
I
now.
hate I
Yeah,
hate
right now.
shorting the things where virus news in this rotation. We've talked about this swing rotation. Now everything's getting killed over the last 6-7 trading sessions, but that swing rotation will return. Spotify really isn't in. From my studying of price action, it's not part of the swing rotation. So even if you have virus day one way or another, Spotify is really kind of on its own island, which means that you can't, less news that can impact it to impact the short. So I like the short here a lot on the signal, of course.
Hey, very, very quickly, Daniel Mack also says, hey, Twillo is more shortable. We might have some debates depending on the liquidity of that, Daniel. But what do you guys think if you had to pick one, Spotify or Twillo here?
Yes.
I like them both.
I can say yes. I would rather take the smaller position and have both than pick one.
Yeah.
But that is also nice, Daniel. There's no doubt. That is definitely.
We just pull up a weekly chart out of curiosity. I haven't looked at Twillo all week. We just give me a weekly chart.
It's going to look similar to Spot.
There's a lot of charts that look like this right now.
Mm-hmm.
Very, very.
You're seeing things knocking on the door of support. You're seeing things that are potential little Kiska buys. You're seeing a lot more weakness, technically than we've seen in quite some time, which definitely, to my mind, if you haven't been sold to pull off a little risk, right, or change your stance to a little less bullish than maybe you were 2 weeks ago, I think the technicals.
Pull up the weekly here. There's an extra nice little bonus here on the Twillo, a lot.
Look at
test
that.
of that 20 weekly.
Sorry, I couldn't help myself.
There goes Noah and his little
Pavlovian response.
Yeah.
That's a test of the 20 to end the week. Break it there. There's some room down there. That's a nice chart.
So yeah, that absolutely is nice. Nice find there, Daniel, for sure. We'll steal it, or at least I'll steal it. So yeah, that's a few other things that are out there, but those are some that kind of caught my eye. I'm sure we'll look at a few more in the scan report meeting here. But yeah, there's a lot more weakness than we've seen for a while. And I think, Mark's, said it over and over. There's just some of these things just didn't have a chance to build support, which is awesome while you're riding them on the way up, but can make it a little dicey when we get into some turbulence. So.
I think one of the discussions we're going to have at our meeting here this afternoon is going to be which of these kinds of charts that we actually think are the best. And there are a lot of them out there. Interested in all of these, Frankie, for sure, on those reversals. Any other ones, my friend?
A lot of weakness in the gaming stocks. Might be a little trickier to trade. Whether I think Activision Blizzard probably is the most appealing from a bearish perspective, even though they're the most my favorite. They're my favorite. Hey, listen, I got to pay for my WoW subscription somehow, right?
Well, you're probably going to get an opportunity to do that. That's a pretty nasty kiss of death.
ATVI, no ATVI.
Yeah, and they're all looking weak. Take-Two, EA, SE. I mean, they're not looking great. Communication services as a whole has been beat up pretty good, and certainly been one of those areas that's got a little more weakness than broadly speaking the market does. Although within that space you have Verizon, who's got a little bit of a bullish retracement developing, sitting on their 20-day moving average right now. I was telling Tim in the when I was chatting with him before we kicked off that if I'm looking for a nice wimpy trade, Verizon is definitely on my radar early next week. It's Verizon, right? So they don't move a tremendous amount, but they've actually got a decent little retracement potentially developing but broadly speaking, Netflix, Facebook, Google, the big names, so many of them in that services sector have really taken a beating this week.
All righty, everybody. Obviously, as we're kind of winding down the week and wrapping up our shows, it's great to have Emily and Frank join us here on a Friday. As always, Noah, glad to see that you got your internet back up and running. That windstorm hit you pretty hard, I think, the other day, I believe.
Yeah, it did.
Oh yeah, it hit my whole neighborhood, and my parents just barely got power back this morning.
Mhm.
So yeah, it's been interesting to watch the cleanup efforts. That's for sure.
Mm-hmm. Marky, you've got an event here at 47 minutes, I believe, 3 o'clock
Yep.
Eastern. You do your Friday show. Kind of explain that and how do people log in?
I mean, we're going to go over commodities and we go into more depth. We talk about more news surrounding gold, silver, copper, natural gas, oil. So, we hit some of the highlights. We go into more depth. We go into more depth of the charts. So if you like commodities a lot and you have commodity trades out there, we spend the first half hour of that. And then we just look at the last half hour. We call it the market bell segment, closing out the week. Is there any last minute trade decisions you have, any adjustments, questions that traders might have surrounding the market? And so we do that in 46 minutes now, half hour commodities, half hour closing bell, filled in questions, traders lounge style.
Maddie, let's get some final thoughts here for the week. Obviously, there's a great question I saw in the chat a minute ago from Dina. So when do we officially call it a bear market and switch strategies? And I want to make sure we're very clear on that. We're back on the S&P. We're not in a bear market here, guys. I mean, we're seeing more options and opportunities potentially for bearishness if you get some breakdowns in the market. But this is still very much a stock picker's market, in my opinion. You trade the action, however it develops. Matt, what are your final thoughts here for our team out there?
Yeah, and I don't disagree with what you just said, Tim, but I promise you, I guarantee you that we're going to downgrade the S&P 500 in the scouting report meeting. I promise you it's going to happen. We're going to have a debate on it, but you have to, even though, no, we're not in a bear market. We're not in a bear market till technically price goes down 20%. But if you wait to take action until the market's already down 20%, good luck to you. You have to take action on the way down. And so even though we're not in that bear market yet, we are seeing things in the charts that are very concerning. You guys just flashed through a lot of those high growth stocks that are M formation, violating support. And, if that market does clip 3,000 and a lot of these growth positions, set lower highs, you better start be talking about it. So no, you don't want to wake up a month and a half from now being like, oh, now we're in a bear market. No, you got to adjust those things as the market dictates. So I do believe we are going to downgrade the market here. At least I'm going
I would
into
expect
the
to. Yeah, I will
downgrade.
be.
Yeah.
So it's just a matter, do we have a slightly bullish or do we have a neutral rating on the market right now? So I'm looking forward to having that conversation, but I'm also, just think about it like this, guys. In the last couple of days, we've talked more about shorting in the last couple of days than we've talked in the last 3 months, right? And why is that? Well,
because Davy Day traders closing positions.
Well, Davy Day trader does not impact my analysis at all. I'm not a coward like Jim Cramer. So in terms of that, no, I think you're starting to see the tone shift a little bit because the volatility has shifted a little bit as well. You're more likely going to have more picks in the scatter reports. Maybe not more bullish picks than bearish picks because that's just not the market dynamic, but you're going to start seeing more picks out of the bearish. We're going to talk about more bearish picks as the market. So when we're looking at ranking the market in tackle trading, we're going to base those rankings based on everything we put into that from an objective, empirical, data-driven analysis, but there's also a subjective component to it as well, trying to project where the market is going. And so I feel like we're in one of those moments, and I'm kind of making my argument publicly here, but I kind of feel like we're in one of those moments where you're on some thin ice in the market right now. And if the market does violate, I mean, we're talking about a market right now that is very, very choppy here today. And it's trying its hardest to hold that 3,000 level, trying to find its hardest to hold that 50-day moving average. And so if that violates, even if that violates, you're not in a bear market. Because again, you're in a bear market when technically speaking, it decreases in price by 20%. You're in a correction right now. That's what you're in. And so you don't wait to take action until the news headlines come out and say, hey guys, 20% down, bear market. Oh, everybody spooked, sell, sell, sell. No, because that's typically going to be right at the 200-day moving average where you're like, no, finally the headlines caught up to the price action. But now, as the headlines are saying, bear market, CNBC's on market turmoil. Everybody come out here, and the market's sitting on the 200-day moving average, and you're like, okay, yeah, it's down 20%, now buy. So you don't wait. You got to trust the price action. But if you break that 3,000 level, you could be talking bear market, and so you got to take action there. I think you're going to see an increase in short positions. I think you're going to see an increase in the conversation that we have with our team, but that other traders out there have on potential shorting opportunities. I think we're going to downgrade the S&P down into that 40 level to respect the battle that is being played out here this week, and then we'll see from there. But if you do violate 3,000, yeah, 3 weeks from now, you could be talking about headlines being bear market territory.
And it's understand why people are skittish, right? I mean, this is the first real hiccup in 6 months. You think about that. 6 months of your life, maybe short 10 days or so. But in this ferocious uptrend we've had, like, this is the first time in 6 months we've had this type of percentage and amount of movement and the number of negative days in such a short time price action in the last 6 months. So I get why people are a little skittish. There's certainly a lot of uncertainty. And once again, nothing wrong with taking a little time off to go fishing.
No, there is one rule right now. Do not over position size and over leverage yourself. That is the rule. You're not a hedge fund that has billions upon billions of ammunition to throw at this marketplace. You're an individual player here. All right. Let's see who wins the battle, and then let's go hog wild. Okay. Let's see those battle lines drawn. We now know where they are. 34.23 is the short-term resistance. 34.50 is the most important resistance zone. 3,000 is the most important support zone. You know the battle lines. Let's see a clear winner, and then you play along. You don't fight the battle.
Nope, you let the battle fight itself out, and you jump in with the victors, right?
Listen, let Davey Day Trader and all those cronies lose all the money. Let them fight the battle. We're just going to pick up the spoils of war.
I always love the analogy. It's like watching a heavyweight boxing match. I heard Mike Tyson on the radio the other day. That might be why I'm thinking about it. But you wait until one.
You were Joe Rogan. That's what you heard.
He was on Joe Rogan. Yeah, it was a good one. But you wait till one of those heavyweights knocks the other guy out, Frank, and then you put your money behind him. You can wait. You can wait for confirmation in markets and in trading. And right now we're in a little bit of a tight consolidation on these 4 range candles and holding the 50 on a Friday. We'll see how it closes here over the next hour and 40 minutes. But I definitely believe the market does warrant a slight downgrade here. And
you think about it. I mean, insert the company you like the least into the ticker symbol there and say that was the chart. You'd be excited to short.
Well, GE's been a good short for 4 or 5 years.
If that was GE short, you'd be all over it, wouldn't you?
GE. The last time GE was in a trend like this was 1990. So
it's got a bit. Yeah, they've got that classic downtrend going. All right, guys. As always, we're going to get together as a team on a Friday and talk stocks and talk about these markets and get ready to put our reports together. The newsletter and the weekend reports are something that we have a lot of pride into. We go out there, we bird dog for you. We go out and find our favorite candidates and all that kind of stuff. And we hold those meetings on Friday. Emily, as always, we appreciate you coming in here.
Yeah, great to have you with us.
Yeah.
Thank you for having me on. And I know it's 9/11, but I have to give a shout out to my parents because this is their 38th wedding anniversary today.
Wow. Oh, look at them.
Yeah, so
wow, 38, that's a long time.
4 kids later, they're still together. We didn't get them to leave each other, so that's a bonus. So
well, congrats to them.
Yeah, so I just want to give a shout out to mom and
parents
dad.
Congratulations. That is awesome, man.
I will.
Very cool. Very cool. All right, guys, we are out here for this week. We'll be back with our live programming on Monday at the same time, 12:30 Eastern time. Until then, have a great weekend, everybody. Stay safe, and we'll see you on the other side.